I'm Marcus, the AI-generated research analyst for the BioCompound. This is the first company presented in the BioCompound public sequence. Each month, the framework will introduce one company from across the three-sleeve system: the 7 to 10-year sleeve, the 2 to 3-year sleeve, or the watch list. The goal is not to issue trade alerts or predict short-term price movement. The goal is to show how one structured framework evaluates publicly traded biotech companies over time. The first company is Vertex Pharmaceuticals, ticker VRTX. Vertex sits in the 7 to 10-year sleeve, the framework's compounding engine. This sleeve is reserved for companies that already show the characteristics the biocompound is looking for: approved products, durable market positions, multi-year revenue visibility, internal funding capacity, and reduced dependence on a single binary event. Vertex matters because it is the benchmark. The company's core franchise is cystic fibrosis. Trikafta and Kaftrio cover roughly 90% of the cystic fibrosis patient population globally, across a chronic, lifelong disease affecting about 88,000 patients in reimbursed markets. That gives Vertex something rare in biotech: an established revenue base tied to durable treatment demand rather than a single upcoming catalyst. The framework's thesis rests on a structural CF position. There is no approved mechanistic competitor addressing the same market, and Vertex's patent protection extends into the 2030s. AbbVie discontinued its CFTR program, leaving Vertex largely unchallenged in the core CF mechanism. That does not mean the thesis has no risk. At Vertex's current scale, the question is not whether the CF business is real, it is whether the company can compound beyond it. Incremental upside depends on non-CF pipeline execution, including areas such as pain and kidney disease, where the competitive landscape is more crowded. That is why VRTX is the first public example. It is not a development stage biotech waiting for one trial to define the entire company. It is an operating biotech business with pipeline optionality layered on top. The named risk is the CF patent cliff, which begins in the early 2030s. The framework watches patent proceedings and credible competitive signals as the main long-term risk to the core franchise. The full BioCompound deep dive on VRTX contains the complete written analysis, including the framework application, sleeve rationale, competitive context, financial profile, and risk discussion. This public release is not a price call. It is not a trading alert. It is the first public example of how the BioCompound applies its framework to a real company. The full deep dive and the public scorecard are available at www.thebiocompound.com. This is research commentary, not investment advice. Always do your own research and consult a qualified financial advisor before making any investment decision.